Let me say this right off the bat. Okay, this is very important I say this in regards to Palantir. Before we even get into the numbers, everything that's completely changed for Palantir's business model moving forward. Okay, listen. It pretty much took a miracle for Palantir to report a quarter that this stock would not go down. This is one of the worst setups I've ever seen in history when it comes to a stock going into their earnings. The stock was skyrocketing into earnings, even strong on earnings day. It trades at one of the highest price to sales ratios we've ever seen in history for any company in the SaaS space. One of the highest trailing 12-month PEs we've ever seen in history for the SaaS space. The setup was horrible. So this was a quarter that if they came in and they beat numbers, but they weren't this insane, let's be very crystal clear about this. This stock would be down 10, 20% after hours. And the fact that the stock's not down shows you how insane these results are. I mean, absolutely astonishing results in regards to this company, okay? So what happened here? What's going on with Palantir? Why does this change everything forever? Well, they started out this presentation by just straight flexing on everybody. And as they should, okay? They show their rule of 40. The rule of 40, very popular rule of 40 for SaaS companies, right? This is insane. So it's basically revenue, looking at your revenue growth and what your operating margins are, right? And Palantir's at 114% now at this point in time. I mean, that's just ridiculous. That's ridiculous. 114%. They're in a whole different stratosphere than every other company kind of in the SaaS space. Like no one's even in the same category. Like it's just ridiculous, right? And by the way, Palantir takes their adjusted operating margin. So revenue growth plus adjusted operating margin. That's how they get to 114%, right? But then they took it a step further and they said, let's compare it against companies in general, globally, not just SaaS companies, right? And look at this. They're at this 114% number. Only number we can find, somewhat close is NVIDIA there at 120%. Like that's just ridiculous, right? Ridiculous. U.S. revenue grew 77% year over year. How many companies do you know grown 77% revenues? Heck, even the almighty NVIDIA is not growing 77% anymore. That's ridiculous. 20% quarter over quarter growth, sequential growth. U.S. commercial revenue growth. Remember, why did I invest in Palantir years ago when the stock was a $6, $7, $8 stock? Is because I saw there being a massive opportunity for this company to grow their commercial revenue. Everybody looked at the defense business, the government business. That put me to sleep. I'm like, that's cool. That's a steady business, whatever. That's not why I'm in this. I don't care about, what they got going on for military, like whatever. I'm in this for the commercial growth. That's how this becomes a multi-$100 billion company or maybe a $1 trillion company someday, right? That's why I was investing in the stock back in 2022 heavily, right? And for me now, I have 1,000 shares in the public account, so we can call it a little over a $200,000 position, and it's the third biggest position for me in my Patreon portfolio, only trailing AMD and Shopify. So I invested in this company years ago for that commercial opportunity, and the commercial revenue growth is honestly where it's at. I mean, the growth rates for that business are ridiculous. 121% year over year, 29% quarter over quarter. U.S. government revenue, that also was a very strong quarter. 52% growth year over year, 14% on a sequential basis. Revenue in general for the company, 63% growth. Like, my thought was, okay, maybe Palantir pushes these revenue growth rates up to 52 to 55%. That was kind of my thought. And that's why I wasn't even going to make a Palantir video, because I was thinking, you know what? 55% revenue growth, 52%, like that's going to be a really good number that's going to beat, but nothing crazy. When I saw they had revenue up 63% year over year, I'm like, oh my gosh, like I got to do a video. I can't just not do a video about this. This is ridiculous. Now, if you exclude out the strategic commercial contracts, revenue actually was up 65% year over year. Ridiculous. Rule of 40 score of 114%. Oh my God. I mean, this is just insane, right? Insane. Now, obviously, they got the NVIDIA partnership as well, which is, that's one of those things. It's like, it matters. It has potential, big potential, but the question is how much potential, right? But there's no doubt, making a partnership like that is phenomenal. But they go through, obviously, all their products and whatnot. So we talked about the revenue growth here. Now, this is important, right? U.S. commercial remaining deal value is up 199% year over year. The reason that matters so much is if you look at commercial revenue growth in general, it's actually significantly less than the remaining deal value, okay? So we're talking about, 78 percentage points lower when it comes to commercial revenue than actually the remaining deal value. So think, basically that's a bullish indicator for the next year, next several years, okay? 2x year over year, U.S. commercial deals closed of $1 million or greater, so doubling up that amount. U.S. commercial deals closed $5 million or greater is up 5x year over year. So basically, they're just knocking out of the ballpark when it comes to selling deals of $5 million or more. Legendary, man. Legendary. Look at U.S. commercial total contract value. 342% growth year over year. What? U.S. commercial total contract value is now up to $1.3 billion. GAAP net income for this company is exploding. Oh my gosh. Look where this company was not that long ago, right? And look what we're talking about now. GAAP net income, $475 million. You'll be flipping my flapjacks. Right? No, you could run that on a year, basically over a full year. You could say, okay, $2 billion, right? So $2 billion, if we were at a 20 PE, we'd talk about a $40 billion market cap, right? Keep in mind, Palantir's around a $500 billion market cap right now. But obviously, Palantir does not deserve to trade at a market multiple, given the growth rates are not even in the same stratosphere. I mean, we're talking about Palantir's growing revenue 60+% right now. Okay, so listen, if you've got a company, an average company in the stock market, revenue growth, you can kind of think in that 4 to 6% range. So let's say 6%, okay? Palantir just put up 60%. That's 10x, right? 10x what an average stock in the market puts up, right, for revenue growth. Okay, so basically we have a situation where if they're growing 10x faster, then they should command a 10x PE more, right? A 10x PE more would be, let's call it a 200 PE. Well, if the company's going to do $200 million or so in net income here, right? Well, then you can say, all right, you could probably slap a 200 PE on that sort of stock, right? And then we're talking about a company that, 200 times 2 billion is a $400 billion market cap. So, at 400 billion, given the growth rates, it's actually somewhat realistic number just because the growth rates are down. Now, where you have an issue is if those growth rates start to go down. So if those growth rates start to contract and all of a sudden they go from 63% revenue growth to, let's say, 30% revenue growth, well, now we could say, okay, they're only maybe 6x or 5x. Let's say 5x in average stocks revenue growth. So now they only command a 5x valuation. So now we say, okay, they command like 100 PE. So then the company has to get to a place where they have net income incoming, right, of, $4 billion plus a year. Because then you could slap 100 PE on it, and then you're at a $400 billion market cap, right? So that's how you play the game of how's their stock valued versus other companies in the market, where their growth rate's at. Does this make sense, right? So Palantir doesn't have the thing to understand about Palantir is it doesn't have that forward PE on it for no reason. The reason it has it is because the growth rates are so far superior versus an average stock in the market. And that's what you got to understand about that whole game. Now, something I don't think anybody's talking about in regards to Palantir's net income, that this really matters significantly, okay? Listen, Palantir is growing their profitability much more rapidly than anybody expected, which means what? They're going to have way more money on the balance sheet. If they have way more money on the balance sheet, guess what they can do with all that cash? They can stuff it into treasuries. When they stuff it into treasuries, getting them 4% or so, and it's way more money than anybody expected, it helps the profitability even more. It helps them make even more money. And so you get in this beautiful cycle of the profitability is way better than anybody anticipated. They put even more money into treasuries, right? That money can make them even more money than people thought. And the business is doing better, so it's like a super compound here of just way better net incomes than anybody anticipated, right? And earnings per share. So, that's just something to kind of keep in mind here, right? Now, as far as their GAAP operating margin, so generally accepting accounting principles, this isn't taking out one-time adjustments and things like that. This still came in at a very impressive 33%. Rule of 40, we spoke about that, 114%. I mean, it was already insane. When it went to the 80s, that was already ridiculous, right? It was 80s? Who does it 80s? Then last quarter, they came in with 94%. This quarter, 114%. So that's the other thing I'll say about Palantir. A lot of people say, We've never seen anything like this before. We've never seen a stock trade at this sort of, price to sales ratio, right? And that's fair. But you ever seen a company in the SaaS space have a rule of 40 of 114%? It is a 101. Like, we do have to admit that. Like, you can say a lot of things about Palantir's valuation. We can talk night and day about trailing 12-month Ps and forward Ps and 2-year forward Ps and how much growth they need to have over the coming years to make. We can have that debate all day. But what you cannot talk about is this is a 101. We haven't seen a company reporting these sorts of numbers. Like, this is just ridiculous, right? Absolutely insane. U.S. commercial revenue growth was up 77% year over year, obviously driven by that U.S. commercial business. That's ridiculous. Government business is actually a drag, which still, like 52% revenue growth for the U.S. government is insane, right? Now, so I got to caution everybody. Something I do worry about is government revenue in future years, okay? Not in terms of is that government revenue going to come in. No, it's just that growth rate. I do worry about Palantir being able to sustainably grow the government business at a very high clip like they're growing at right now, okay? U.S. commercial, like they have still a lot of room to grow that business. The government business, I have a little bit more worry about that, but we'll see. They have made a lot of strategic deals with the government, so that's just something to keep in mind there, right? Commercial revenue growth in general, 73%. Keep in mind, guess what? Europe is still a drag on the business overall. Like their U.S. businesses continue to grow phenomenally, right? 65% growth here, like we talked about with the strategic contracts. We continue to invest aggressively in AIP in the U.S. while driving operating leverage at scale here. So they're showing their adjusted operating margin, $601 million, representing a margin of 51%. So that's up from 46%. So we have expanding revenue growth, expanding margins, expanding earnings per share, expanding net income. The question is, how long can they put this up for, right? They can keep putting this up, like, just party on. But as soon as these numbers, just remember, ladies and gentlemen, okay? Just remember, I got to caution everybody. Listen, as soon as these numbers start to decelerate, you're going to have big problems in Palantir stock. I can promise you that. But for right now, as long as you keep accelerating these numbers, but we know at some point in time the party's going to come over, just as all parties do end, right? But for right now, man, it's just acceleration after acceleration after acceleration. Customer count grew 45% year over year. Commercial customer count grew 49% year over year. That's a really strong number. 204 deals closed of at least $1 million. 91 deals that were at least $5 million. 53 deals that were at least $10 million. Remember I spoke about cash, treasuries, all that stuff, right? They're up to $6.4 billion in cash equivalents, in U.S. Treasury securities, and no debt. Woo-wee! So for the fourth quarter, they're now expecting $1.32 billion to $1.33 billion of revenue. They're talking about adjusted income from operations, right around $700 million roughly, right? I mean, these numbers are astonishing, absolutely astonishing, better than really anybody anticipated here. So, okay, so next up here, okay, in regards to Palantir, right? I posted this on X just a bit ago. I said, we can say a lot of things about Palantir's valuation, but we can't say anything about the fundamentals. I just graded their income statement here, folks. That's an A+. That's an A+. Look at the interest income, by the way, almost $60 million. Even though technically treasuries are kind of yielding a little less, like Palantir's still able to continue to build that interest income up. And it's because like they have more and more cash on the balance sheet. So they're able to get more and more out of their money. But it's an A+. That's perfect, right? Their balance sheet's perfect. Their cash flow is perfect. Like everything about this company is literally perfect on the fundamentals. The valuation's all you have to really poke at this company right now. You will have a big case to be made when this company's growth rates start to decelerate. When that happens, then you'll have something to talk about, right? Because then it will be, Palantir's got a crazy valuation on it and their growth rates are decelerating. But that's not the case right now. They're still in acceleration mode, right? I said if Palantir didn't have a sky-high valuation on the stock, on these earnings results, the stock would be up 20+% after hours. Easily, right? Easily. Just in the past week, we have received over 500 applications to join the Prep Stock Group. That's unbelievable. I'm super happy everybody's taking investing serious or starting to take it serious and being like, hey, you know what, let me get up to a higher level. Let me get access to all Jeremy's course curriculums and things like that, right? I'm likely going to close my private stock group to new members, likely I would say in the next 30 to 45 days. And the reason being is it's just been overwhelming demand. Like we're not used to 500 applications, like, you know, an average week, maybe 100 applications. And I have a very small team, so we can't keep like this massive influx. So if you want to join us in the private group before I close that down to new members, pinned comment down there here today. Click on that, fill out a form, see if we can get you access in there. It's mayhem in regards to that right now. It's insane, right? And then as far as when I would open it back up to new members, I would say at some point in 2026. When you join us in there, we'll send you your Steel membership cards, private group card, 1000X card, and if you join us on a lifetime basis, your lifetime access card. Ooh, I can't even show you that one. That one's just too beautiful. Okay, Alex Karp next up here, and then we'll get into Tom Lee.
CEO Alex, it is so good to see you this morning.
Cheers, ladies and
we
gentlemen.
had your biographer on the broadcast before, and we're speaking about you now in third person, but now we're doing it in first person. The earnings were a blowout, I think, across the board. We can talk about maybe why the stock market reacting the way it is.
I had a very in-depth video on Palantir. I posted that on the reaction channel here. So if you want my very in-depth thoughts focused around Palantir, check out the video I released here on the reaction channel yesterday. Okay, that was a banger if you're really into Palantir stock.
But, you know, I was listening to the call yesterday, and I wanted to, just for those who didn't get an opportunity to hear it, I think you made some fascinating points about why you think this company and maybe even yourself are so misunderstood.
Well, there are lots of easy ways to misunderstand me. I misunderstand myself, and you know, it's not like the super conventional playbook thing. Look, we're an anti-playbook company. If you want to do the personal version, I'm like this dyslexic, formerly and I believe currently still left of center, who actually sticks up for progressive values, which triggers, you know, TDS loving people, because I think the Democrats are no longer progressive. And then the company is built in a truly sui generis, unique way, which would only be possible in America, and actually explodes every assumption of how an expert would build a software business. The more you actually know about building software, the more odd, unique, and inexplicable our rise in success, and I would say domination on the enterprise software battlefield looks and is. And then I would say one of my main issues is Palantir, because we were we called a lot of things that are kind of establishment views that often are viewed as kind of being
This guy, he's like, that's Alex Karp. He's the only person that knows probably who Alex Karp is right there.
super woke into question in every single assumption of Palantir. The people who piled in to Palantir were people investing their own money, often people who are not in the investor class, non-experts. And even till today, the experts sit on the sideline and say, hey, this can't be true, while the average American who invested in Palantir, and for the first time, maybe arguably since World War II, average Americans got venture returns investing in Palantir. So you have this massive divide between the average.
All right, Mr. Karp, got to push back against you there, okay? Listen, Alex Karp's kind of saying like, oh, we're the only ones people made. No. Tesla's made retail investors life-changing money. Palantir, sure. Yes, absolutely, right? Meta's done the same. Apple's done the same. Microsoft's done the same. Google's done the same, right? Like, I could go down a long list of companies that have made investors life-changing money, right? You got even companies like Elf Cosmetics, you know, obviously made me ridiculous sums of money, right? Celsius Beverage, Monster Beverage, one of the best returning stocks in the entire stock market. If you look at, basically 2000 returns to 2020 returns, like that 20-year span, one of the best returning stocks you could ever find. There's a long list of stocks that got retail investors rich, right? Palantir's one of those. Nvidia's another one, right? AMD's another one. Like, there's people that were loading up on AMD at $1, $2, $3, $4 years ago, 10 years ago. 10 years ago, AMD was like a $2 chuck. It was a $2 stock, right? And obviously, if you rode that wave to 200 plus now, like, you've made life-changing money. So Palantir absolutely deserves its credit for making a lot of people a lot of money, but to push back against Alex Karp, let's not act like you're the only one. Like, there's been plenty of stocks, and there'll be plenty of stocks over the next 5, 10, 15 years that will make people life-changing money that, they'll look back and be like, I cannot believe my portfolio says this amount of money.
Person who evaluated themselves and the expert class that still was working on assumptions that have historically not been true, that obviously, if you look at the earnings, if you actually look at, we grew the company, I'll go through if you want to go through the numbers, but extraordinary results.
Yep.
And then the expert class is weak need, and the retail people are all in. So, but in fairness,
but that's what I wanted to ask you about in terms of because there is a misunderstanding. Clearly, you look at the analysts. Most analysts, think that this stock is overpriced. You have people like Michael Burry out there shorting it. Everybody who's shorted this stock thus far has been on the losing end of it. And I'm trying to understand if you look at sort of the growth trajectory, the sales, how much of the sales, frankly, I think actually even there was a huge part coming from even existing customers, and just what the scale of this thing ultimately looks like in your mind.
Okay, there are two parts. Of course, when I hear short sellers attacking what I believe is clearly the most important software company in America, and therefore in the world in terms of our impact, simply to make money, and trying to call the AI revolution into question, where we have this anomalous numbers, 114, rule of 40, et cetera. It just is super triggering, because these people, they can pick on any company in the world. They have to pick on the one that actually helps people, that actually has made money for the average person, that is actually supporting our war fighters. Why do they have to go after us? And I'll tell you what, it's crazy motivating, because I'll tell you why the short sellers are constantly getting screwed by Palantir. Because every time they short us, we just are like tripling down on getting the better numbers, and part, honestly, to make them poorer. But okay, so the question of the actual power of the business and what is it worth? I mean,
in all due respect, Alex Karp, okay, listen, I wish I could talk to Alex Karp, because he actually stressing. He's stressing over this, short sellers betting against the stock and these sorts of things. The man's stressed about this, right? It's like super trigger. Listen, success is going to bring a level of hatred. It's going to bring a level of envy and jealousy and those sorts of things. That's what happens, right? Even myself, I'm not some super famous person, but I have a lot of people that watch my channel. You think everybody that watches my channel likes me? No. If a video of mine if 100,000 people watch this video, guarantee you at least 1,000 people don't like me. They actually hate me. They talk trash about me. That's just what it is. You think every musician, you think everybody likes Taylor Swift? No, okay? You think everybody likes Tom Brady? No, okay? Anybody that's got a level of success, you're going to attract some negativity. You're going to attract haters. You're going to attract people that don't like you. And that's fine. Don't stress about it. That's what you signed up for. You understand? You sign up to be super successful, to have a lot of money, to have a successful company, do anything big in this world. You're going to have a certain amount of people that don't like you and want to see your company fail or whatever, right? And short sellers, that's not most short sellers they're not betting that Palantir is going to zero, the company goes bankrupt. They're betting that Palantir is going to go down 50% or something like that, right? It's going to be a short-term big move down for the stock. They're not betting that Palantir is going bankrupt. Man is stressed about this, stressed. And if I could just talk to him, I'd be like, dude, chill. Chill. They're not betting your company's going to zero. They're not betting that you're going to go bankrupt and you're going to be, begging for change on the side of the road. You know what I mean? And Palantir, to take it one step further, a lot of people don't like Palantir's products. They feel like Palantir's military-related products are not good. Let's just put it that way. And when I say not good, I mean they're too good for the battlefield, as in they cause death. I don't know what other way to put it. So they don't actually like Palantir the company because its products could be very, very deadly on the battlefield. And so that dude, chill. You're gonna have some haters. There's no doubt about that. That just is what it is. Your company's gonna have some haters. Get used to it.
Today, one of the things that is actually in the book, the biography, and that I actually think you always have to ask is the person persuasive or are they right? And across all sorts of movements, political, you see this on the regressive part of the Democratic Party. We're about to probably have a complete disaster. I was born in New York. But if you actually said...
Oh, yeah, and then the man's, crapping on the Democratic Party. Okay, you want more enemies? You know what I mean? This is the second time he's brought up Democrats in a negative light. Second time. This has been a 4-minute clip. He's brought up Democrats in a negative light twice now. Twice. And you wonder why some people don't like come on, dude. Like, whoa, what planet are you living on?
Do these things actually work? Everyone's like, of course I'm not going to vote for that. But instead they ask, does it work in theory? The theoreticians, you have to ask, how often have you been right? And Palantir is about pragmatic decisions that create unfair advantages for America and its allies. And on that, we've been right for almost 20 years on all major decisions. And I believe we'll be right going forward. Now, you could argue, I don't know, like they're constantly like, but they thought Palantir was overvalued at 10. They thought it was overvalued at 20.
That's fair.
I'm not even here saying what the valuation is. I'm just saying, find a company in the world that has a rule of 114, that has U.S. commercial growing at 121%,
Fair.
that aggregate growth in the U.S. is 77%,
That's fair.
that has throwing off free cash flow in a way that's anomalous, and that is fully aligned with our customers. And you figure out the value, but they're in the business of being skeptical and being wrong, and we're in the business of giving an unfair advantage to American workers, American warfighters, and our investors.
Being short is a very difficult place to be because you can lose
Yeah,
it.
and also to be fair, this I got to stick up for Alex Karp in this big respect. Okay, listen. A lot of times CEOs are asked about the valuations of their companies, right? Listen, just because you're a CEO of a company, you started a company, does not mean you know how to properly value companies. That's not how this works. I would say 99% of CEOs and CFOs do not properly know how to value a company. Have no clue. Why do you think every company, when they actually go to acquire another company, they hire professionals to assess the assets and if this business is worth this, right? If they knew how to do that themselves, they wouldn't go pay tens of millions of dollars of fees or hundreds of millions of dollars of fees to investment banks to then go assess is this company that we're going to buy, this new software, blah, 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 is it worth it? And so Alex Karp doesn't spend his time running valuations. So he doesn't actually know if his company's overvalued or undervalued. He's a CEO and he's, founder, so he's going to always assume his company's undervalued, if anything, right? We're going to grow forever and all these sorts of things. And that's every like I said, 99% of CEOs, they don't know how to value companies. That's a whole skill set you have to bring up, right? No different than if you plugged me into Palantir, I wouldn't know how to run that business today. Why? Because I haven't built up the skill set to go run Palantir. If they wanted to have Alex Karp and me switch roles right now, Alex Karp's going to have no clue to do what I'm doing. And I'm going to have no clue to do what Alex Karp's doing. Because you know why? He hasn't focused the last 17 years on running valuations on companies or trying to figure out if an asset's undervalued or overvalued. And I haven't spent the last 17 years trying to run his business. You know what I mean? We both fail. And so, it's just crazy. But they ask these CEOs, the valuation of your company, thinking they're going to know. They're just going to talk up their stock. Yeah, we're doing all this stuff. We're growing. I don't know, valuations.